As some of you might already know, Bux Zero, which is a stockbroker, um, recently made a decision to change the pricing model, which will take effect on April 1st. I'd like to go through with you all these changes and see if these changes are affecting you and see why Bux Zero made these changes. And let's start off reading exactly the communication that they sent to investors. Um, Basically, what they claim here is that they've experienced a sharp increase in operational costs because of slower activity. So we know, of course, that after the excitement of 2021 in the stock market, definitely there's been a decrease in interest, also because interest rates have gone up, so maybe less people are investing in stocks. So basically, they don't have that scale to justify, kind of a free fees for investing. I think this is definitely understandable. Also, we know that after COVID, all this inflation costs have skyrocketed in many sectors. So they decided to make some changes, and they also add that, unlike many of our competitors, Box does not receive kickbacks such as payment for order flow from our partners. And this is a major source of revenue for other brokers. There are risks with that. So, for those who don't know what payment for order flow is, now I'm gonna show you what it is. If we check on the Investopedia website, we can see that this is a practice in which brokers receive the payment from market makers to direct their clients' orders to them for execution. So there's an extra layer, and all the orders go to just one entity. This practice has become very popular in recent years, especially in the US, and it seems that over half of all retail trading volume in the United States basically is happening with payment for order flow. So there are some benefits, of course, and you see the benefits every day. So because there's lower cost for traders, so you started to see in recent years the absolutely all these apps popping up, that the commission-free trades and stuff. So and if you remember, the traditional brokers were much more expensive. But yeah, you need to know that there are also risks, like everything in life. So let's see what these risks are. So there's a potential conflict of interest. So brokers have a duty to act in the best interest of their clients, but is it really the case when you're directing orders to market makers? So you might just say, okay, I'm prioritizing the interest of the market makers. So there's a bit of an issue with transparency there. Another risk is the potential for, of course, making very difficult for clients to know exactly where the orders are being executed and at what prices. So you know that these brokers make money. Maybe they have zero fees for trading, but then they have other fees. They have the spreads in the stocks, and they use other things. Of course, they all need to make money. They all are, need to support themselves and their operations. So the other risk is that they might be bypassing other exchanges or alternative trading venues that might offer better execution prices. So being like a monopolist, this third-party company can just say, okay, you have to pay me this amount of money, and that's it. You have no choice with that. So maybe today is cheap, tomorrow, who knows? Tomorrow, if they all go through this third party, then this third party can say, okay, sorry, but our fees are increasing, and basically, tough luck, you can't do anything about it. Now, this makes me think and about what happened with Robinhood and GameStop. If you remember, I think it was in 2021 when Robinhood started canceling orders from clients on GameStop because that was causing an issue with the hedge fund. that was behind, that was basically backing and supporting Robinhood. Robinhood, for those who don't know, is an American US broker. So that kind of thing. I'm not sure. I'm not saying that this is a similar situation. Not at all. I'm just saying that it makes me think of something about, like, it makes me think that this kind of things can happen. Maybe not today, but there's also another risk that there could be an environment where prices move rapidly and unpredictably, because all these layers, and there could be market manipulation. Some people say that, and of course, the regulators have implemented a lot of measures, so it's not that easy to actually do these things. The SEC requires brokers to disclose their PFF arrangements and to obtain the best execution for the client orders. All the central banks in the world have also a lot of rules and compliance. So there's some definitely benefits, but you need to be aware of the risk, and so Bux decided that they didn't want to do that. They didn't want to do share lending like many other brokers do. So for this reason, their costs are a bit higher. They made some changes though, and we can see here, if you want to go for saving plans, you need to know that commission free, instead of charging €1 per month plan, that's gonna take place in April with all these changes. So they did actually make some changes to reduce your costs as well. So they will introduce a €0.99 commission for US orders, but then they changed the FX markup for US orders from 0.35% to 0.25%. So this is another way brokers make money, not just with the spreads, but also with the FX markup, and Bux is reducing that. They also, they just increased commission for your orders, and the other limits here, they want basically to encourage you to switch to saving plans rather than zero orders. So the big change here, they're introducing a monthly service fee of €2.99. I'm aware that some people don't like the fixed fees. They're a bit annoying to them, but Bux just made this decision, and at the end of the day, you have to pay somehow for your services. If you don't pay anything, then they make money anyway in some other way with the hidden fees or other practices that might be risky for you as a client. So this is just a choice. They've been transparent, and they like that from Bux. I'm not saying it's the cheapest broker at the moment. It is actually not. There are much cheaper brokers, like definitely Trade Republic, which has been the big one that has just entered the Irish market. Trading 212. But Trading 212, I know they do share lending, and Trade Republic PFOF for sure, and they also have other differences. So there's a lot of layers in between. So I think I just covered everything of this pricing structure changes starting from the 1st of April. So thanks for watching this video. If you like more of this content, please subscribe. Bye for now.